Hey everyone, this is Vishal from Equity.GURU, and today we're going to continue to talk about the banking sector. We'll talk a bit here about TD or Toronto Dominion Bank here in Canada, and sort of the things that have developed in the past few days here. The day I'm recording, you're seeing a huge pop in the equity markets here, and this is from signs of a slowing economy and also potentially some good earnings, but we'll talk about that in a different video and why markets are reacting like this. Although, I haste to say that technically, the markets are still within the range. So we are still waiting for that breakout, and this could just be a support play, but we'll talk about that in a separate video. Let's talk about the banks, and we'll start with TD. As you can see here, the short bet against Canadian Bank TD has increased by 45%. So 2 weeks ago, TD became, and well, it still is, the world's most shorted bank with hedge fund bets betting. The short position that hedge funds had was about $4.2 billion. And, obviously, if a hedge fund is doing a short or hedge funds are shorting TD, they're doing so not necessarily for, some would argue, okay, yeah, it is speculation, but they probably have a good reason for shorting TD Bank. And there's a few theories on why the short is, happening. One is this idea of potentially a short against the Canadian real estate market. We can maybe discount that now just because other banks or other Canadian banks, BMO and Royal Bank of Canada, their short positions came out, and it's around 2.1 billion and 2.2 billion worth of shares out on loan. You think if it's an overall Canada real estate play, those bank shorts would be a bit higher. There's this talk about this TD Bank. They have this 10% stake in Charles Schwab, which recently lost a significant portion of its market value, and this is just like a sympathy play to that. And then there's another, this is the reason that a lot of analysts agree upon, and we talked about this in a previous article, the exposure to U.S. regional lenders. So this is a U.S. regional bank play. The acquisition of First Horizon Corp has raised concern about TD's exposure to the U.S. regional bank lenders, especially in the light of this recent bank crisis. And you can see here a few people here believe that this is arbitrage investors. And what do I mean by an arbitrage investor? They are event-driven hedge funds which bet on mergers and acquisitions by buying shares of the target and shorting the acquirer's stock. And there's this idea that there's this deal that's going to be closed, again, incorporating U.S. regional banks. The biggest factor is noise here around closing of First Horizon and what TD Bank could be paying for it, said an analyst at Cormac Securities. So, we talked about this in a previous article. The short position has increased. A lot of people wondering, what's going on here. And there's a lot of headlines now, again, about the regional banks, right? So just a few days ago, before we had like the Meta earnings, and we're going to be having Amazon on the market close today, but we got earnings from the regional banks, weren't great at all. I think there's only one of the U.S. regional banks. It was Huntington Bankshares, which managed to grow total deposits, but a lot of the regional banks were showing, this deposits, total deposits decreasing as money was leaving these small regional banks to run into the safety of, the larger financial institutions. And I found this very interesting chart here provided by Yahoo Finance, and their source is from the Federal Reserve. Deposit balances at U.S. commercial banks, and this is all U.S. banks, have declined by 510 billion since March. So you are seeing this decrease in deposits, and this is something I've talked about the banks. They're seeing this their deposits decreasing. They're not lending as much because interest rates are pretty high. So it sort of sets up this shaky picture for the banks going forward. And there's some banks like Goldman Sachs which aren't even doing too well on their fixed income trading, right? Where banks would generally borrow money or from with a low interest rate and buy long-term bonds, and they would basically be making money throughout the entire trade. But that's sort of changed now with the rise in even short-term yields. So that sort of complicates things. And again, that's something I've talked about in previous articles. But First Republic, let's go back on First Republic. First Republic earnings came out this week, and the troubled regional banks, the deposits fell 40.8% to 104.5 billion. And this was worse than expected. They do mention that, well, the CEO is mentioning that they are now trying to, find a way, or what they call strategic options, to improve its capital position. And there could be potentially this idea of a few larger banks, which did come to the help of First Capital, where they placed 30 billion in uninsured deposits with us as a way to keep the bank afloat. That some of these big boys may have to, jump in again to try to keep the bank, well, not to keep the, well, yeah, to buy the bad assets that First Capital has and take a bit of a hit, but it would be a better hit if it'd be better hit than FCR going to the regulators apparently. That's what they talk about here in on CNBC and stuff about regulators alleviating banking fears, and FCR, our First Capital Bank here, potentially not going that route, right? Maybe being bid by a whole bunch of other banks here and getting saved by the banking institutions here. And a source familiar, according to Yahoo Finance, said that First Republic does have the potential to avoid being seized by regulators, but it will require assistance from the U.S. government. So let's keep an eye on this because, as I said, the banking crisis is probably not over. And in my article on TD Bank, I did mention the regional banking chart, right? IAT. Obviously, we had this huge break when the banking crisis issue occurred in March. We've had a bit of a range here now. No breakdown just yet, but potentially, if we don't break above this range here, above like $37 here, the downtrend could continue, which might mean some more trouble for the regional banks ahead. And if we take a look at FCR, I think most of you have already seen this. If you follow the markets for FRC, my bad, there we go, First Republic Bank, you'll see, the chart looks very similar to the IAT chart, although, we have broken into new record lows. We did have that big gap down on earnings and the numbers that we heard from deposits. And there could still be some more trouble here for First Republic Bank. But as of now, the markets are sort of shrugging that off due to earnings and also due to the U.S. economy slowing. And I know that might be, it sounds weird, but we'll talk about that in the next video coming up. But, once again, banking fears and more downside for U.S. regional banks may not be over just from this technical basis and from what we are seeing here on First Republic Bank. Again, two things can happen. Either the banks will come to buy the toxic assets here from First Republic, or things deteriorate a lot where, government regulators will have to jump in, and that could potentially have impact on the equity markets as that banking crisis fears begin to build up again and become, the dominant narrative on the equity markets. Just closing off, I will mention that there's, again, all this data has already come out in terms of the US GDP, but a lot of analysts were also saying that this fall in First Republic, or the, potential continuing decline of First Republic, as well as the depositors, the deposits that are being lost on the US regional bank side, potentially could complicate things for the Federal Reserve, which is actually expected to raise interest rates next week on May 3rd. And, we heard that the Fed did consider back in March, in the last Federal Reserve meeting, they did consider the banking crisis in March and said that, we were thinking about maybe not raising rates, but, we stepped in and so did the regulators and we alleviated it. And, that's why we're raising interest rates, right? So, be prepared to maybe hear about the comments that Jerome Powell will say or have when it comes to the U.S. banking, sector, because of what's happened here recently in the U.S. regional banks. But it just appears, as looking at the markets, other data points are sort of taking control of the narrative rather than this banking stuff. However, as I said, watch the banking sector, watch the First Republic Regional Bank, watch IAT, and I think this sort of paints a picture, the deposit or picture, right, that we are seeing in U.S. regional banks breaking down here, meaning that there could be some more trouble for the banks ahead. Before we end, let's take a look quickly here at the chart of Toronto Dominion. In my article, I did mention this large weekly head and shoulder pattern, but as you can see, we did not break below the neckline of the support, which is crucial and key for the trigger. However, we are now just returning to retest the 84 resistance zone. And if you're a trader, I'd be looking at this daily chart. You can actually see there was a rejection really where we had a couple of days of range here near by that resistance zone and then a sell-off. So I'd keep an eye out on TD chart here as well, going forward, because there is quite a large short position, obviously, on this bank, and they're going to be making money when this stock falls. So that's it for me, folks. If you enjoyed this video, give it a thumbs up. Be sure to subscribe, and I'll catch you guys all in the next chart attack video.